Hi, everyone. I'm Meenakshi, and I'm here with my teammates, Apurva, Keshav, and Ayush. And we're here to present PNC Thrive, which is a debt paydown solution based on AI. I want to speak first about why we chose this problem statement. Like our previous team also indicated, all of us have some kind of debt. We actually have many types of debt. And we, most importantly, don't really talk about it. It's kind of taboo to discuss debt openly. And that's why we think AI can be an interesting solution here. So in terms of numbers, we think consumer debt is a silent epidemic. And this is based on the fact that, as per the New York Federal Reserve statistics, the US household debt as of last quarter is $18.3 trillion. And the total credit card balance is $1.2 trillion. Simultaneously, there is indication that there is use of AI to improve personal savings and debt payback. But also, most interestingly to us, there is stigma around seeking debt advice. So let's double click on that. Consumers have debt stress, but they don't really have anyone to speak to about this. You can go to a bank, but they can give you either a refinancing option or more loans. You can actually even go to your friends, but shockingly, people are not even speaking to their friends or their partners about this. There is a lot of financial infidelity. We are not sharing how we are spending, even with our loved ones. Why is that? Research points to three core factors. First is the fear of judgment as coming across as a financially unsuccessful person. Second is just the overwhelm of trying to pay back such a huge loan amount in a short period of time. And so you end up just focusing on now. And finally, there is that aspect of loss of control, which comes from an externally imposed solution, which makes you then constrict your spending in a way that you don't want to. So the core question that we then asked ourselves is, how can we build an AI coach that customers can truly trust? And we broke that down into how can we help users overcome the shame and anxiety and stigma around having debt, particularly large amounts of debt. And secondly, how can we build something that is better than a customized LLM they can build for themselves or any other solution that already exists in the market? So we came up with Thrive. And Thrive is effectively an AI solution that will help you plan, prioritize, and pay back your debt by giving you personalized and explainable recommendations, which can reduce your debt stress over time. We explored many personas, but whether you're Ben, Mia, or Rachel suffering from student loans, or you're suffering from a high credit card debt, or you could have an unstable source of gig income, you all need a solution that actually speaks to you one-on-one without judgment. It doesn't judge your mistakes. And I think if we had to really drive down on one persona, it would be young professionals because they have immediate need of guidance. There is a very large kind of outstanding student loan burden on them. And also they have digital affinity to adopt. At the same time, they provide long-term customer value because if you can actually build long-term financial health for them, they can prove to be really good long-term customers.
So PNC Thrive is designed to evolve with the user. We start with trust, building clarity around data use and responsible AI. Then personalization, tailoring insights to each user's debt mix and goals to deepen engagement. And finally, with sustained value, tracking progress transparently so users see their growth over time. For us, trust wasn't an afterthought. It was the starting point. We began with research identifying the top drivers of trust for AI in financial services from leading industry reports. For design inspiration, we built our features so the AI coach directly reflects those drivers. That led to 4 key trust pillars: data privacy, accuracy, auditability, and explainability. Now let's see how these pillars come to life in the user experience through a quick demo. Oh, right here. So here's the onboarding screen, the first moment of truth for any AI experience. We're upfront about how data is used and why. This transparency builds credibility before any feature even starts. Next, the user securely links their debt accounts. The trust hook here is secure authentication and neutrality. We clearly state that Thrive is agnostic of where the debt sits, PNC or elsewhere. That reinforces our goal, is guidance and not pushing product. And once the user is connected their accounts, the AI coach provides personalized and explainable recommendations, like which debts to pay down first. Every suggestion includes a why. The explainability keeps the user in control. Users can adjust assumptions, test what-if scenarios, or even challenge the recommendations, making the system very auditable and not a black box. And finally, the dashboard closes the loop on trust. It shows measurable milestones. The user can visually track how their decisions, guided by AI, translate into tangible progress over time. And together, these trust hooks turn an AI feature into a trusted relationship.
So as per our product roadmap, once our customers trust our product, they open the doors to personalization. We want to make every moment personal to them and meet customers where they are. What makes our AI coach really different is how deeply personal it'll feel. So imagine this. Ria just started her new job. The coach recognizes this change and says, "Congrats on the new role. Do you want me to bump up your monthly savings goal?" That's live event personalization right there. Next, it understands her exact profile. She's a single renter with moderate risk tolerance. So instead of a one-size-fits-all approach, it tailors her debt strategy to fit her exact reality. Then comes the scenario builder. Ria can increase her monthly payment by $200 and instantly see the impact. It makes payoff plans very visual, real, and actionable. And finally, we will give micro nudges to build healthy habits. If the coach notices that she spent 20% more eating out that month, it gently prompts, "Want me to see where that extra $85 went?" No shaming, just very smart guidance. And this is how we'll make every interaction personal, timely, and sticky, turning a financial tool into a very trusted financial partner. Now, once we have earned trust and doubled down on personalizing the experience, the next big unlock for us would be continued value. How do we keep the customers engaged and motivated over the long term? We know that debt pay down isn't a one-time event, it's a journey. So instead of a tool that people just use once and forget, we have designed a coach that evolves with them. First, through seamless life integration, customers can involve their families or partners in planning. For example, setting joint shared milestones, sharing dashboards, and collaborating on goals like mortgages or student loans. This makes the experience stickier and even more real. And second, we celebrate every success. We want to really reinforce positive behavior. And when customers trust us, feel seen through personalization, and then keep receiving continued value, they don't just stay, they become advocates. And that is the true value proposition of Thrive. But who are advocates and why do we even care about them? Based on a recent study, advocates hold 30% more insurance products, 18% more on investments, and 12% more on personal loans. And it doesn't just stop there. Banks with high advocacy scores grow revenues 1.7x faster than peers. And this is where everything comes together. In the long term, Thrive is designed to create a self-reinforcing growth engine for PNC. It starts with an education-first approach. As we pointed out, our model's focus is on simplicity and trust for our customers. As we deepen advocacy through smart product experiences, these advocates don't just stay, they expand their relationship, and this leads to greater market penetration across products. Happy advocates then drive organic customer growth through word of mouth, which is not only cost efficient, but also very credible. And because this is a cycle, every new customer enters the same trust to advocacy loop. The product becomes a self-reinforcing growth engine for PNC.
Now, for any financial products, it's essential to earn and maintain regulatory trust. How we envision this for Thrive is through 4 pillars. First, the bias mitigation. Second, data security. Third, being explainability. And fourth is continuous auditability. Yeah. So one of the biggest risks in any financial AI tool is hidden bias. Now, how do we address that? Hidden bias is systems learning from the wrong patterns and giving out harmful advice. Thrive takes a different path. Instead of relying on historical lending data, which may be biased, Thrive utilizes a vetted, transparent knowledge base created by financial advisors from PNC. It is the entirety of universe that Thrive works on. We pressure test this vetted base through synthetic scenario testing against marginalized segments, that it should give out advice which is equitable and fair for all segments. Lastly, we remove any proxy variables which might impact the advice given out by Thrive. Second, trust isn't just about the advice we give, but also how we protect our customers' data. Thrive is built on the same bank-grade encryption that is used by PNC. In addition, every user can see what data has been shared and is given granular control over opting out of any data being shared. Lastly, any PII data is masked and separated so that it's not a part of the advice given out by Thrive. Next, explainability and rationale is a really important part of Thrive, both for the end customers as well as the regulators. For every advice given out by Thrive, there is a clear why. Every suggestion comes with clear rationale, with direct attribution to the knowledge base on which part of the knowledge base is being used to give out that advice. This builds trust in the product, but along with the advice, we also give users to flag or tag any advice for human oversight and check for errors there. This creates a feedback loop to improve Thrive further. Next, Thrive is designed with continuous auditability at its core. Every change in the knowledge base is stored in a version control repository, giving regulators access to Thrive's version at any point in time. Second, a real-time monitoring framework can check and ensure that the model doesn't drift away from its intended output. This gives high-risk readiness to Thrive and puts it ahead of the regulations in the ever-evolving AI space. To make sure that the product is regulatory covered from all aspects, a collective effort of multiple teams is required. This being the tech and cybersecurity team, the customer experience team, the financial advisory team, as well as the data science team to update the models.
Talking about the go-to-market strategy. Our go-to-market strategy is built around 4 key tenets, each designed to build trust first and then scale responsibly. Let's walk through them. We start with brand awareness, because before people use an AI financial coach, they need to trust the intent behind it. We'll showcase success stories and co-brand with trusted names like FICO and Experian, positioning PNC as a leader in responsible, transparent AI. Next is distribution coverage, reaching the right audiences. Our primary persona is the young professional juggling student loans and early career finances. To reach them, we'll partner with employers, financial wellness programs, and university aid offices, meeting them where money decisions already happen. Then comes adoption, where ease builds with confidence. Users can start directly from a text or a message, no separate app needed, reducing friction and making Thrive feel like a natural extension of PNC banking. Finally, scale. Expanding through credible partnerships helps PNC grow responsibly while maintaining the same trusted foundation that defines Thrive. So our go-to-market isn't just about launching a feature, it's about launching trust at scale. Thank you, and we're open to questions.
5.5 minutes.
Nice work. I liked a lot of the ideas here, and I particularly liked the upfront recognition around the problem of like shame and embarrassment kind of coming into the debt story, right? That's could be one draw to working with an AI assistant. But I didn't really necessarily see that linked into the experience that you designed. I saw like certainly highlights of reinforcement, but can you talk a little bit more around like that acquisition process or how you're thinking about, that emotional connection?
Yeah, I can start and then I can pass on to Keshav for that. The way we were thinking about designing this is on the PNC app itself is one of the ideas we had was we can recognize these opportunities where we can prompt savings, and that savings is an essential part of how you pay back debt. And so prompting savings can be an organic way to draw people into the experience. The PNC app bank app can be a great place to do that. That is one way we hope to acquire customers. But I think the first year strategy is very much going to be focused on user acquisition, which we believe is going to be about maintaining that anonymous interaction, making sure people who are using the app are translating that via word of mouth to their friends. And Keshav, if you have anything to add to that.
Yeah, and I think just the same aspect is the fear of judgment. And I think we're tackling it head on with the trust hooks that we talked through in the demo that, with the security, authentication, and neutrality pieces, we're ensuring that their data is, again, fully secure. They have access to it. There's explainability, auditability at every point. So there's no judgment piece to the machine that they're actually talking to.
Also, just to add on to that, in our GTM strategy, we also mentioned that we'll do these debt-free meetups, wherein we'll have like a human element to it. So like PNC financial advisors will be present there, and we read in the current strategy for PNC, they're investing heavily on kiosks. So that is something that we also plan to leverage to bring in the human element and like basically acquire customers through empathy in the first year.
No, great presentation, and I think another aspect which impressed me around empathy and belonging is that there is an integration of householding in your proposal where you would like to include the family, so therefore you share the burden and be open about it. That's a good call out there as well. The one question that I have, if you go back to your go-to-market strategy, there is plenty of partnership here, right? Co-branding with FICO, partnership with Credit Karma. So what will make this unique for PNC, right? What is the uniqueness factor? What is the standout factor besides helping a customer to really appreciate what we offer? But what is the uniqueness in the product? Because there's plenty of partnership required here.
Yeah, I can take that one. So I think the essential piece here, why we're emphasizing on partnerships, is like building credibility. Again, these organizations are very trusted. They're thought leaders in what they do, pretty much. And the idea is to gain credibility from the users that, hey, if you're co-branding or partnering with them, or even there's an opportunity to do an integration where we can prompt the user that, hey, this is an advisor that you can go for unbiased advice. Again, not necessarily PNC debts, but debts across any institution, and we can prompt them through these organizations. I think that gives PNC also the credibility of non-PNC bankers, people who are not banking with PNC, because the idea is, again, to not have this only for PNC users, but also get in more users from outside the PNC ecosystem to come in and try the system and hopefully then get into the PNC ecosystem.
And just to quickly add to that, we do think that we are maintaining kind of a tight balance between like being a bank associated app versus having these conversations which we want like to indicate that we are anonymous and kind of independent from PNC. And I think one of the ways that can come about is having industry-wide collaborations, which indicates that this is beyond just the profit motive, and rope in customers who will actually look at this association as something they can trust in more than perhaps just a single brand identity.
Yeah, I also have another question regarding your go-to-market. So I see a lot of cost over here in terms of sales, right? Can you elaborate a little bit more on your decision on this human-led growth versus product-led growth?
I agree to that point completely. And I think I want to emphasize the loop that we talked about. Yeah, so based on our one slide back. Based on our research, we were thinking about why, as a business plan, why would PNC invest in this? And based on our research, we found out that people once they like establish true trust with their bank, they really start doubling down on their relationships with the bank. And we believe that the earlier investment on building credibility and trust through our go-to-market strategy is important to cater to this trust factor. And ultimately, once, and we estimate a timeline of approximately 1 to 2 years to build on this trust factor. Once that trust factor is emphasized and we get in the customers and make their experience more sticky with the multiple product features that we have, we are basically planning to convert them into advocates. And the research says that banks with high advocacy scores grow revenues 1.7x faster than peers. So yes, there is an initial high cost, but we believe that in the long term, it's going to be more than compensated with revenue. Yeah.